So for everyone listening, obviously just getting started, I'm going to give it a minute or two before we jump in. Obviously, people come in a little late and I don't want them to miss out on anything. But please know we see that you're here and we will start very soon. Okay, just doing one last hello before we start for real. We'll start in about 30 seconds to a minute, but just letting you know that we can see you're here and we will begin soon. Thank you guys. To the second edition of Xapo Talks, we're delighted to have you all joining us on X, where we'll be broadcasting for the next 40 minutes or so. Today's topic you should probably know because you're signed in. But yes, we'll be discussing stablecoins, and stablecoins, of course, aren't new to our members at Xapo Bank. In fact, they're also the hottest topic in fintech right now, and hardly surprising considering that the global transaction volume in 2024 was 27 trillion US dollars across 1.25 billion transactions, and that includes business and personal payments. That number will be much, much higher in 2025, surely. So maybe we should get started. Firstly, some introductions. Myself first, I'm hosting. My name's Ian Horn. I'm the head of content at Xapo. I'm also the author of Why DeFi Matters, a book that charted the rise of decentralized finance a good few years ago now. I'll be guiding this conversation, and it's a conversation that I care about. Now, as some of you will know, I'm a recent joiner here. My previous role, I was curating the agenda for Money 2020 Europe, the show in Amsterdam. And anyone who attended that event will tell you the same thing. This year's agenda was a breakout year for stablecoins. Even, with all the talk of AI and agentic, everything going on, stablecoins were the hot topic. So I have some great speakers to introduce. Please note the opinions given today are, of course, the opinions of the speakers and not companies that they work for. This is not financial advice, etc., etc., etc. And first up, I'm going to introduce our product manager, Anton Iribazov, who you may have seen during recent appearances on Roxham TV. Anton, hello. Can you quickly introduce yourself to our audience?
Hello, everyone. I'm Anton. I joined Xapo 4 years ago, and basically I'm responsible for everything related to transactions. And I'm really, really excited for this talk.
Great stuff. So you're our guy for stablecoins. You've been working on our stablecoin product for a good few, months or years now, Anton.
It's been 3 years. We enabled the first stablecoin rail 3 years ago, and immediately it was a win. And also it was the most requested flow from our members back then. So we really heard their opinion, and now everything is history. We are just improving the transaction rails with stablecoins.
Amazing. I think that frames it really nicely, because this conversation, as you kind of suggest, started 3 years ago and then some, but it's only been this last year or so we've seen such interest around stablecoins. And with that, I think we should do the decent thing and introduce our guest today. So today, Anton and I are joined by Simon Griffin, Chief Product Officer at Stablecoins payment platform BVNK. Simon's led the product and commercial teams at some very notable institutions, including Silvergate, RBS, Barclays, HSBC, and Chase. So Simon, firstly, thanks for joining us. How are you doing?
I'm doing great, thanks, guys. Really appreciate you having me on today. Big fan of Xapo, big fan of Wences. So yeah, looking forward to the conversation.
Great stuff. We're off to a good start, Simon. Love to hear that. But firstly, tell us a bit about your role at BVNK. I reeled off some of your kind of career history there. So why did you decide that BVNK was the right place to develop your career?
Yeah, thanks, Ian. So as you mentioned, I'd spent about 5 years at Silvergate Bank, and through that experience, actually, that was where met the Xapo team in the first instance, because I was actually supporting them using some USD correspondent banking services. And but just really through that experience, I had some very large clients, actually in terms of stablecoin issuers as well as traders and other banks. And I think through that journey, very much became an evangelist around stablecoins. And when the opportunity came to join BVNK in 2023, I sort of jumped at the chance. I would say, 2023, the landscape for stablecoin payment companies isn't quite what it is in 2025. But I think those of us have kind of like held these views that there's just a better way, to operate commerce on the financial side. You sort of believe in this vision, and it's just amazing to sort of see how much that's evolved over the last few, months and years.
Oh, you're so right. The conversation's kind of exploded, because I remember, going back a few years when I was spending time in the traditional finance space, the stablecoins conversation kind of lived on, but I felt like much of the payments world wasn't talking about it that publicly. Compared to now, it's hard to have a conversation about anything else if you're discussing fintech. So your timing, Simon, was pretty much perfect by the looks of it. And what an interesting place to be now with BVNK. So obviously we could talk about stablecoins all day. We're going to talk about it for a fair amount of time. But there's a reason we've got together with BVNK for this conversation, and that's because we've obviously partnered up with BVNK to enable stablecoin deposits. So let's talk through that and why it's happened. I mean, Anton, if I can head to you, because let's start with the position of need. Why are we working with BVNK?
So before answering this one, let's make a step back and just clarify why we need stablecoins at place. So right now, for everyone listening this, over 55% of all deposits coming to Xapo are coming with stablecoins. And it's really hard to explain why this is happening for people residing in Europe or United States. But for everyone living in South America, living in Southeast Asia, using stable coins is the only way to move funds internationally. Imagine you live in Argentina, you have capital controls, and on top of that, you have horrible inflation. And those people really, really need stable coins. That's the only way for them to protect their wealth and ensure they can transact internationally. And that's why stablecoins are so important for Xapo. And having said that, the most requested payment flow from our members was USDT on Tron. But Ian, it's also related with our vision, because right now Tron is the most used blockchain network for USDT, but we don't know what's going to happen tomorrow. It may be something, it may be Solana, it may be something else. But also, what is even more interesting is that we don't know if USDT will be the only popular stablecoin. You saw a few months ago, PayPal enabled their own stablecoin. Maybe more stablecoins will arise very, very soon. And we really needed a partner who can help us to scale and enable new stable coins or new blockchain networks respectively. And BVK is offering this, is offering flexibility, speed to market, and most importantly, a great service, because to be honest, working with IT company like BVNK is much better than working with a traditional bank trying to offer some payment rails. So it was like the most obvious and smart choice we could make.
Yeah, there was something you said when we discussed this before, which was it's a bit like partnering with an IT company rather than a bank. I mean, what do you think of that? Actually, Simon, what do you think of that?
Well, I think it's really appreciate the comments there, Anton. I mean, at the end of the day, BVNK, we offer a number of things, but at our core, we offer the ability to sort of have, provide these managed services actually through our license infrastructure. So, we're licensed in UK, EU, the US, and hopefully fairly shortly in Singapore as well. And so we very much can provide that global coverage on the regulatory side, as well as the technology capability for, companies like Xapo to be able to, fundamentally end up receiving dollars, but enable this payment capability to all of its members. I think that's kind of generally the sweet spot. One thing I would say though is I do think Xapo Bank is very much kind of previewing what I think is going to be the future of banking. Having that capability to send and receive stable coins fundamentally just as a part of your kind of banking service. I think, you guys are very much leading the charge there, but I think it's a charge that we expect to see a number of other competitors and banks kind of follow in the not too distant future. You guys are just very much ahead of the game.
Well, that's good to hear. That's good to hear. And how has this partnership come about? Obviously, there's been a conversation happening over several months and possibly years, given your kind of background with BVNK. But Anton, could you explain us, how you decided it was time to make this partnership and kind of make this happen?
Of course. So the business case was inspired by the fact that over 70% of USD transactions right now are settling on Tron network. We are supporting Ethereum. Back then, Ethereum was the choice for making stablecoin transactions. Right now, it's Tron. And because of that, we really needed a partner. As I explained, BVNK was the most obvious choice. We screened the market. We talked with pretty much every company. And to be honest, there were different options on the market, but what we really wanted to achieve here was the opportunity to scale. And if there is a new stablecoin or a new blockchain network, we really wanted to be able to react super quickly. And the process was super seamless with BVNK, like super professional experience. And I'm actually very excited for what's coming next, but maybe we can discuss this in a bit.
For sure. But I am gonna skip ahead to one thing that we talked about before. You're talking about Tron being an important development, and I think it would make sense to actually explain that in terms of speed and in terms of savings for people that are sending money, right? I mean, this is a significantly more efficient and cost-effective rail, right?
Yeah, maybe I can take a little bit. So
Yeah, go for it.
Oh,
Let's go to
sorry.
Simon and then Zanton. Yes.
Yeah. So I mean, maybe you already hit the kind of the cliff note there, Ian. But I mean, what we've seen, and the reason why Ethereum's kind of market share, both in terms of the stablecoins issued on that network, but also in terms of the volume, we're now seeing a bias towards Tron, and as I say, it certainly is preference by set stablecoins over and above others. But if you look at kind of transaction timing specifically on the Tron network, even in times of congestions, those transactions generally complete in under 3 seconds. Whereas, on Ethereum network with times of congestion, those numbers can get up to sort of a minute, even in significant congestion, 5 to 10 minutes. And so whilst Ethereum has always been sort of historically kind of one of the go-to networks for stablecoin payments, we've seen sort of necessity create innovation by, activity taking place on Tron. And as well, we're also seeing other networks coming up as well. Maybe that's part of the point that Anton was going to touch on. But certainly the dominance of Tron is primarily a function of the speed and efficiency of that particular.
For sure. And Anton, let's build on that, because I think, as Simon says, that is very much the point you were making earlier.
Exactly. That's the main point. Especially in South America, literally everyone is using Tron for the reasons Simon just shared. But also why this was and it's still very critical for Xapo. We enabled literally 7 days ago, and over 50% of USD transactions right now are settled on Tron. So it's a huge success, and the main reason for this is also the swap fees, because if you have USDT on Tron, you have to swap it for Ethereum. You're going to pay approximately 1% fee, and right now you can deposit directly to Xapo without paying this fee. So yeah, I mean it's increasing the speed for deposits. It's definitely a cheaper option than Ethereum, but most importantly, it's much more convenient for people around the world.
Yeah, and you mentioned the kind of global nature of it. Our digital wealth report came out in Q2, and it showed that stablecoin inflows had grown with a 40% increase in the Middle East, 25% in Africa, and 12% in the Asia Pacific. So it's, as you say, a very global thing. But it also depends on where you are in the world, how much value you're getting from this. I mean, Anton, when it comes to Xapo Bank members, what are the main reasons why our members are using stable?
So Ian, let's consider the following example. You're living in Argentina, and what's happening there is that you have a capital controls. If you want to withdraw more than X amount of money per month, you have to pay some crazy fees. On top of that, the inflation recently it was 170%, I believe, and this is really destroying your wealth. And it happened a few times in the past where the savings of people, they were confiscated from the government. So you have those three reasons. Like you cannot move money internationally, you cannot be confident that your wealth is not going to be confiscated, and also like you have a crazy inflation. And the most obvious way to avoid this, to protect your wealth, ensure you can move money internationally, and actually avoid inflation, was to have a USD account. The thing is that having USD account in Argentina, it's extremely complicated. So that's why stablecoins are solving this issue. They're essentially offering a USD account for people to protect their wealth and transact it internationally. So that's the main obvious example why people really transact stablecoins to Xapo from South America. But there is also another example from Thailand. So on Thailand, for example, and some other Asian countries, the inflation is not that bad, but you cannot transact internationally. I don't know if people listening this are aware, but if you live in Thailand, you have to go to your bank, you have to submit a request to move money internationally. You have to wait a few days before and if your request is approved, and then you can finally initiate your transaction and wait a few days for transaction to be completed. So why to do this if you can just send USDT to Xapo or to any other bank in the world? It's a win-win. You don't pay transactional fees. It's instant, and most importantly, it's a hassle-free.
Yeah, I think that's really well explained. And actually, what I find interesting is the story you're telling there. Not so much the Thailand story, but certainly the hyperinflation story isn't very far removed from Xapo's origin story either. So it's interesting to see that even all these years on that avoiding inflation is still a major reason for money movement. But then also, like you say, the simplicity of actually being able to move money as you should be able to move money, having that power to do the things that the financial system should enable you to do. And I think maybe perhaps some of these points are lost on people that have a primarily financial experience in parts of Europe or maybe the US. So it's good to get this global perspective. Simon, to bring you in, I mean, obviously we speak from a Xapo perspective here, but for BVNK, where are you seeing most of your growth and opportunity?
Yeah, well, I think it's certainly fair to say that there's been a tsunami of interest that's been coming through, certainly towards the back end of 24 and certainly into 25. I'm sure we're going to maybe touch on sort of regulation and how that's starting to help shape people interacting with stablecoins, particularly on the business side. But I think really the biggest piece for us is really being driven through that kind of regulatory framework. And in turn, what that's done is kind of unlocked a number of conversations we've been having both with corporates and financial institutions. In some cases, those conversations have been going on 6 to 12 months already. But I think with the introduction of kind of a much clearer regulatory framework, both in the US and Europe, it gives companies, particularly public companies, then the confidence to start to open up whether it's stablecoin pay-ins as some sort of checkout style product, or whether it's stablecoin payouts, whether from a treasury perspective or to enable it for their users. Really, it's just a better way of doing cross-border. That's where there's been significant demand. We've been fortunate to have some sort of notable announcement with people like dLocal, WorldPay, Yan and Flywire. So a number of companies in that sort of PSP remittance space. But increasingly, I think we're seeing a lot more demand now for sort of those multinational corporates. And I think that's going to be probably the biggest wave of announcements you'll probably see in kind of Q4 and Q1.
Yeah, and I think there was a degree of the whole gradually and then suddenly about this. We talked about it for a long time, and then all of a sudden you get the Genius Act passes, Circle goes public. I mean, and actually months before that, we were already seeing a lot of hype around stablecoins, probably going as far back as the start of this year. I mean, how do you, Simon, how do you react to this kind of upswell of demand in such a short space of time? And has the market evolved in the manner that you expected it?
Yeah, that's a great question. Well, I guess maybe to start off, BVNK was really founded in 2021. So I'd like to think that the founders and the management team sort of, whether we saw it coming or hoped it was coming, but it was definitely the direction of travel that we planned. The good news is, our volumes are in the billions really before the hype kind of came in, and I think that's really back to this kind of ethos that the next generation of financial services is we think will be built on stablecoins and blockchain technology more broadly. And so, in many ways, that the momentum was there, the conversations were there. But I think what we've really seen is that these kind of new political dynamics have sort of unlocked the desire for companies to move forward. I don't think there's a CTO that gets fired in 2025 for not implementing a stablecoin strategy. I would argue that the CTOs not having one is probably going to be a big problem if you're a Fortune 500 company or a financial institution.
Yeah, definitely. I've seen that narrative, especially for banks. Everyone needs a stablecoin strategy and they need it yesterday, is what I keep hearing. I mean, Anton, have things developed as you figured they would, and how are you responding to it from a kind of Xapo perspective?
So on Xapo side, we have a strategy where we really want to be flexible and ensure our members can transact with the most convenient stablecoin. I mentioned earlier that especially now with the Genius Act, this opening the doors for pretty much every company to issue their own stablecoin, and for us being flexible to react to any new stablecoin is going to be the key moving forward. I actually see a bit of a risk here arising from the fact that USDT is dominating the market, and maybe we should also consider having other stablecoins that are just arising to be supported and hopefully adopted from the customers. But at the end, it really depends on the infrastructure. Like if you have the right infrastructure, which is supporting you to transact the stablecoins you're looking for, then I believe this risk can be mitigated. And then that's why we have Xapo Bank. That's why we are partnering with BVNK just to ensure this will happen.
Yeah, and Anton, just to that point, I think it's a point that's really resonates strongly with us because we very much bill ourselves as stablecoin agnostic, network agnostic. And the reason for that is obviously the current iteration of the sort of value transfer is using stablecoins, but of course, there's a lot of projects being announced around things like tokenized deposits, which, based on what we understand, could operate in a very similar way in terms of payments to stablecoins. And so I think you're absolutely right to not only just keep ears on the ground, but actually just this idea that we don't think that there's going to be one network that sort of rules them all, or one stablecoin to rule them all. I think it's going to come down to customer preference. And I think for different use cases, we certainly expect to see certain stablecoins and certain networks perhaps become a preference for those use cases. But like you say, I mean, I think what a high frequency trader, based in the US is looking for a stablecoin and a network to do is very different to what an Argentinian consumer is looking to use stablecoins and payments.
Yeah, Simon, let's build on that. I mean, in which ways are you seeing customer, if we can call them customers, preference for stablecoins? You're mentioning regional differences there, but are there any other kind of trends you're noticing in which stablecoin someone has a preference?
Yeah, well, I mean, I think the first off, it's very hard to build those network effects, right? And so I think we're obviously in active conversation, lots and lots of new stablecoin projects, which is really exciting. But the one challenge that every stablecoin issuer is going to have is, how do you generate network effects? How do you avoid the situation where you have kind of the one hand clapping, where you've got someone who wants to send the stablecoin, but not someone who wants to receive it. And I think it's an important part of the evolution that we expect to see in the industry, where stablecoins have utility not just for send and receive, but also to store, and whether that's primarily as a function of trying to avoid inflation or capital, but in addition to that, the ability to be able to spend them. So we're seeing trends now where we're seeing cards issued on top of stablecoins. It's something an initiative that BVNK is actively working on ourselves. As well as actually, a number of projects where you have the ability to also earn yield on the stablecoins as well. And so I think it's really kind of the evolution of this ecosystem that allows you to send, receive, store, convert, spend, and earn, that starts to sort of enable someone to live much more on chain versus the world we're in right now, which is still largely a world where there has to be interoperability between fiat currency and really very active. To your point specifically though, Ian, about kind of stable coins for certain uses and networks for different uses. Certainly one of the trends that we're starting to see, and particularly as we have conversations with large financial institutions and sort of some of the very largest multinational corporations, is sort of the dynamic around privacy. And one of the benefits, I very much see it as a feature of blockchain technology, is the ability to go on a blockchain explorer and see when transactions are complete. But it also does raise questions about, well, okay, but do you have anonymity in those transactions? And if you're sending out a wallet address to other people, is there a concern there around privacy? And so, of course, there's a number of features that exist around things like zero knowledge proofs, but also now what we're seeing is an evolution of sort of not just in the layer 2 space, but also new layer 1 blockchains that are sort of starting to target some of those privacy features natively on chain. And I think what we're going to see is we're going to see a world where certain activities, particularly very, very large activities, let's say involving things like margin or settlement between larger financial institutions, are going to be biased towards networks that naturally have more privacy features relative to, let's say, a chain like Ethereum or Tron, where perhaps some of those, even though wallets themselves aren't tagged as being owned by an individual, at the same time, aren't as maybe as focused on some of those issues.
Yeah, and Anton, I think I should let you pick up on some of that. I mean, firstly, the different ways people are getting benefits from stable coins, including deposits, but also yield. And then secondly, the desire to have different functions with your money, and privacy being one of the most important ones there, as Simon rightly points out. I mean, Anton, how do you kind of plan ahead for?
Yeah, I can provide a lot of points here, but I will focus on the two of the, I would say, the top and most important ones. The first one is that actually Xapo was the first financial institution in the world which was offering yield on top of the stablecoin deposits. Even right now, if you deposit stable coins, we are going to offer 3.75% yield, which is paid daily. Like in general, stablecoin yield is one of the top challenges which literally everyone is trying to solve right now, and we were really pioneering in the space. But what I think it's here the tricky part. I agree with what Simone is saying, but we should not also underestimate the fact that the stablecoin issuers, they don't want to really concentrate their business on one blockchain network. Now, I mentioned that 70% of the volume on USD is on Tron. Tron arguably is not the best blockchain network. It's probably not the most decentralized one. The same with Ethereum. So imagine you're a 167 billion company like Tether, and then you're depending on a stablecoin network where the founder is arguably not doing the right things in front of everyone. And this creates the risk for your business, and that's why we started seeing some projects from last week, like for example Circle, the USDC issuer. They launched their own blockchain. Stripe, they're also working on launching their own blockchain network. But what is really interesting here is that Tether, they're investing a crazy amount of money right now to build USDT settlement on top of Bitcoin, because Bitcoin is the most decentralized, the most trusted network in the world, and that's the way how you can really avoid the risk of on only one centralized blockchain network. And then on the point for the how anonymous the transactions you Tether are, as I mentioned, investing a lot on Lightning Network, and Lightning Network is super anonymous. So in long term, I think this is exactly the vision which Tether are trying to implement, having decentralized blockchain network, ensuring that nothing will happen with your business while you're having very high level of security and ensuring the transactions will be anonymous. So I think we are pretty much on the same page here. We just need to not underestimate the power of Bitcoin here.
Yeah, for sure. Completely agree. And to your point on the yield on the stablecoin deposits, that yield is paid daily in Bitcoin as well. I realize our audience is Bitcoin first, so let's flag that. But some really good points. I want to get into the kind of regulatory side of things very briefly now. Again, opinions provided are those of the speakers, not the companies they're representing. And I'm not, Anton and Simon, I'm not trying to get you to say some nasty, salacious stuff. I just want to actually talk about regulation. Simon, I know you're based out in the US, and we keep talking about the Genius Act, and it's really easy to say, okay, that's changing it. It's making it, it's making it easier to do things with digital assets and crypto, Bitcoin, so on. But in reality, for BVNK and for yourself, how has the Genius Act and the regulatory approach actually changed?
Yeah, so I think most importantly, what the Genius Act has done is it's really given us a very clear definition of what a stablecoin is, or I should, using the Genius Act terms, say a payment stablecoin to be a bit more precise. But not only that, but like who can issue them, what the reserve requirements are, and then finally kind of who will regulate that activity. For those of you who've been sort of like following along crypto news for the last few years, you've seen a whole bunch of enforcement action from the CFTC and the SEC around people engaging in this activity, because there was really just an absence of definition. And so I think what happens is, now that those things have been defined, and really not just defined, but also, who's then going to regulate that activity, being very much these are kind of banking products and therefore subject to banking regulation. It's also then very much kind of like laid the foundation of saying, okay, well, if you're sending, receiving, storing, and exchanging, you're ultimately not subject to security, right? And of course, those are very, very important things in the US. And unless you're licensed and regulated to do so, the consequences and penalties are very simple. And so now that we have that clarity, and furthermore, the FDIC actually came out and said, this is basic activity that all banks can undertake. We very much see it's kind of a part of banking. You've now got 5,000 banks, call it another 5,000 fintechs, who will say, okay, cool. Now I have a platform in which I can actually interact with this technology in a way that is not going to keep the chief risk officer up at night, that the regulator is going to come banging on their door, or the CEO is going to get called in front of Congress for doing something perceived to be illicit. And so because of that, I think now we've got to a spot, you have huge demand coming in, because at the end of the day, 88% of all FX is still taking place using the US dollar. Give or take, still about half of all of our international payments involve US dollars as well. And so I think the dynamics for anyone trying to move money cross border are very clear. I think there's been lots of, plenty of good examples to what, why it's often challenging to do that, particularly and so I think stablecoins could be a pretty big accelerant. But in the absence of that framework, I think there was a lot of people just naturally just sitting on the sidelines because of the fear of potential consequences of getting.
Yeah, I mean, do you feel a kind of cultural shift as well? Because I've felt in the past, I'm going to make a cowardly accusation, so I'm not going to point it at anyone, but I've often heard government figures talking about cryptocurrency and got the impression they didn't really know much, of what they were talking about. Do you think that there's yeah, you're laughing, so I'm making a decent point here. It's not, but it's also, I'm not going to aim at them, but you know what I mean? Do you think the system is woken up?
For sure. And I think previously what we had was we just had this one term, which was crypto, right? And people would think of Bitcoin, altcoins, stable coins, including things like algorithmic stable coins, as all sort of part and parcel of this bucket of potential nefarious activity. And I think, what we've seen and really led by Bitcoin in many ways is just understanding that the technology ultimately is kind of the platform for which you can then issue different types of assets, and those assets can have different purposes. And I think kind of having more precision around what stablecoin specifically is and how it can be used in a sort of safe and sound way, I think has really been the unlock. But to your point, I mean, I remember having conversations with regulators 5, 6, 7 years ago, and some of those conversations, were sort of illustrative of the fact that, there just wasn't that level of knowledge and expertise there yet. But certainly, I think the regulators, like probably everyone, is sort of waking up to the fact that the sort of the genie's out the bottle here, and I think everyone's now able to sort of adapt and leverage the technology, really for the great, and not just sort of the few on the sidelines that's sort of using it for all sort of the wrong activity.
Yeah, absolutely. I mean, Anton, do you have anything to add here before I move?
I can speak from our experience a few years ago. If someone had told me that we are going to have a US government signing Genius Act or crypto bill, I wouldn't believe it, because like every single one of our partners, when they heard that we are a bank, Bitcoin bank, supporting crypto transactions, they actually were very reluctant to work with us, and they were saying, no, this is scam, this is not never going to work. And now see, like 5 years later, you have a US president, you have a bill which is actually supporting crypto, which is absolutely insane. And this is just confirming how strong the crypto use case is. And for me, this is the proof that like crypto already won. And that's the fact I mentioned earlier, that 55% of all deposits coming to Xapo recently are coming through stablecoins, and I believe this number will only increase because of the reasons we already discussed: cheaper, faster, and much more convenient way to transact money internationally.
Yeah, really interesting point, and I feel like Xapo is a bit of a unique case compared to other banks, and at the same time, that's really telling information. I mean, there was something I saw, I was reading, just a few days back, with Goldman Sachs referring to this year as the stablecoin summer. But in that report they made, they suggested that the risk to traditional payment providers and remittance companies are exaggerated. In relation to the rise of stablecoins. I'd be really interested to get your thoughts on this. Anton, go first if you have something.
Of course, what we're seeing, we have more and more customers actually aiming to pay with because it's faster, cheaper, and much more convenient. And also, on the other hand side, we have more merchants that are actually willing to accept payments in crypto. And basically, what they're doing, they're eliminating the middleman. Imagine you're buying a coffee and someone is paying with Visa or Mastercard debit card. Basically, they're going to charge the merchant up to 1% for this transaction. And then if you receive the payment in stablecoin, or you receive the payment in Bitcoin, you're just eliminating this additional cost, which actually it's improving your profit margins. Another amazing example, I believe Simon will share, it's with the payrolls. Like you're a company, you have to send money to over let's say 1,000 employees. It's much faster and much more convenient to do it with stablecoins instead of using traditional rails. So I think the risk is very much there. You saw the Stripe acquiring a stablecoin company for over $1 billion. And if there was not a risk for them, for the traditional payment companies, those acquisitions won't be possible. So I think everyone is really understanding what's happening, and now, especially with the Genius Act, it's so crystal clear that the crypto will really impact the traditional statements. You saw also, you mentioned the Circle IPO. That's another proof that this will happen. It's a question.
Yeah, maybe just to kind of tack onto that, I actually think Goldman Sachs were right, Ian. I do the impact or the risk to the traditional kind of payment providers and remittance companies is very much exaggerated. And the reason I say that is because I don't think they're actually threatened in practice. I think that they're just, transforming and evolving their business. And so it might feel like revolution, depending on your perspective. It's like, oh my God, if I'm a traditional payment company using SEPA or focusing on Swift payments or focusing on Fedwire, is my entire business going to go away? And I think the short answer is no. I think certainly even in the medium, people often refer to them as on and off ramps, but the on and off ramps or the exchange between, traditional rails and block, based digital assets, they're going to be essential. And certainly I think that that's going to be the case even in the medium term over the next few years. But as it relates to kind of those PSPs and remittance companies, as I mentioned, they're really transforming their businesses, and you'll continue to see announcements, as those PSPs and remittance companies stand up this capability by themselves, or perhaps more commonly, use companies like BVNK.
Yeah, and I think here we have to distinguish clearly between stablecoins and Bitcoin, because according to McKinsey, there are 9.1 billion transactions that are happening. 9 point. And stablecoins, because of the on and off ramp to the US dollar, I agree, maybe are not that high risk for traditional payment companies. But then you have Bitcoin, and Bitcoin was created to be the most decentralized peer-to-peer electronic cash system. And if Satoshi vision come to reality, basically you're going to be able to transact any fiat currency internationally 24/7 for less than one, without having a bank in the middle. And then when this happens, and so far I believe we're on the right track for this to happen, I can argue that those companies will be impacted, and they have to evolve similar to BVNK, just to be the infrastructure provider, but not to make money from the transaction itself, because they just won't be needed if you really can transact on top of.
Got you. Yes, thank you, Ant. Leaving a gap there. So let's look right to the future, because we're running out of time, and I want to see where all this conversation ends up. We talked about the expansion of stablecoins, the increase of participants. So longer term, what do we think the role of stablecoins is going to be in international payments, and also with a number of market players? Obviously, we've seen new entrants to the space, and then a lot of proposed entrants. I know we've heard from like PayPal and Revolut as well, talking about this. Do we expect an eventual consolidation of the amount of providers, or do we expect that just to expand? I realize there's several questions at once, but Simon, let's just put them all at once.
So at the end of the day, the real question is how much does a user, or should a user, really care about which numeric character is sitting after USD or EUR? And I think certainly my perspective on this one is a big part of sort of the value prop that we look at BVNK is how do we sort of obfuscate that noise? How do we remove some of the complexity between the networks, between these different assets, and sort of make them, to the best of our ability, completely integrated? And so I think we'll continue to see a proliferation of stablecoins. I think through that journey, a number will ultimately not succeed because of the fact that they just won't be able to achieve the network effects that we touched on. But I certainly do think the number of stablecoins, if you re-ask that question, August 27th next year, is probably going to be 5 to 10x what it is today in terms of those that actually have some meaningful money. But I mean, fundamentally, I think the specific token being used is going to become less and less relevant to the user as long as that they have interoperability, whether it's across the network, across the token. Maybe the other thing I would say is, we've still got a dynamic in the world where we have over 1 billion people, and the number of people in the world with a mobile, without a mobile phone, I believe is significant. And so I think anywhere that kind of that friction exists, particularly cross-border, I do think stable coins and prospectively tokenized deposits, will ultimately, and as we see kind of that continued proliferation of kind of, the world getting smaller and cross-border business taking place, I think that's really the big sweet spot. So, in my mind, this is at least a $50 trillion opportunity if you were to roll the clock forward, 3 to.
Yeah, and that's an unfathomable amount of money, isn't it? I mean, let's last question I'm going to put to Anton, which is to Anton. How do you see this partnership with BVNK evolving? Speaking, going back to the Xapo Bank perspective, where are we going next with this, and how are we building out our own?
So we're really monitoring how our members are reacting with the USDT. Right now, we have much more deposits on Tron versus Ethereum. Clearly, there is a need for faster and much more convenient blockchain networks. The next step for our partnership will be to enable more stable coins and more stablecoin networks, respectively. We're working on this. It should be live in the next couple of months, and it's actually depends on members' feedback and members' request. So if someone really wants to see, for example, USDC, you can always ping us, you can always speak with us, and we can make sure the priority of this feature is going to go significantly. Other than that, BVNK is also offering exciting other rails, which we are right now discussing, but the focus right now it's mainly on.
Got you. Thank you. And I think that brings us to a close. But Simon, seeing as you've joined us here, have you got any final points you'd like to share with others?
No, really appreciate the time. Thanks for having us on, Ian, Anton. It's been great to chat. And, for anyone interested, feel free to hit up BVNK if you're looking for more information about how we can help you with your stablecoin journey.
Brilliant. Thank you so much. Anton, thank you to you as well. Really great getting your insights on this one. Pleasure to have you.
Thank you. It was a pleasure.
Great. And finally, thank you everyone who's listened in. It has been a lot of fun having you with us. This has been Xapo Talks, the stablecoin session with BVNK. We'll be back with another one of these next month. Keep an eye out for our notifications, mostly on X, but also on other platforms too. So yeah, we look forward to hosting you again. Thank you for joining us. And